Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. I'm your host, Harvey Freed. We've got an awesome panel today. We've got Harry Glanz with us on the Zoom.
Good morning, Harvey. How's everybody doing out there? Beautiful day. It is. Realize, Harvey, this is November 21st and the weather's like this?
It's beautiful outside here, going up to about 42 degrees. We'll take it, a little bit of sunshine today. And we got a star-studded panel, of course, from our office. Lawson is joining us on the Zoom. Good morning, Lise.
Morning, everybody. How you doing?
You bring in fantastically. So you bring in Jacques Gagnon. Of course, Jacques, you're always with us all the time here from Keller, Williams, Lakeside. And you bring the managing partner out there, Jon Reusch. And if I don't know, got that straight, I know you're operating the building. You're doing everything over there, Jon. Welcome to our show.
Thank you so much. I really appreciate it. It's a pleasure to be here. And let's have some fun today, huh?
Yeah, no doubt. Real estate's a lot of fun, Jon. It's a good way to start things off. And of course, this year it's been really exciting, completely different than anything we've ever expected. The biggest housing boom since 2006. And you guys have, 400 or 500 agents over there. So your numbers must be going through the roof.
Yeah, so we're approaching 400 agents, actually. We're at over 10% market share in Macomb County and then the Tri-County area. Just for perspective, we do just over 3,000 closed deals a year, take over 2,000 listings a year. So we really do have a pulse on the market. And this year has been unique in so many ways. For perspective, from June 1st until today, we've closed 2,000 units.
Wow.
And just last month, it was over 300 units. And you don't see that in October, November traditionally. But the reason for that is, of course, the shutdown that we experienced at the first half of the year, and people want to get into the market.
Hey, Lisa, that 2-month shutdown doesn't seem like it affected our friends out in the real estate world. That's for sure. 2-month shutdown. So we had to jam everything in there from basically sort of the end of May all the way through now. And I don't see anything shutting down. Lisa, your purchase business must be booming again.
It is. It absolutely is. I just got back, as you know, from Hawaii and was writing purchase agreements and getting loans originated while I was there. It just does not stop. I think right now when everyone is, coming back to home and realizing that they're going to be working from home more, if you don't have the space that you need to work effectively, I think a lot of people are looking to move, whether it's upsizing, upgrading, getting the home office they need to work from home. A lot of these employers are talking about making this a permanent situation. And I think people are realizing that, and this is a lot of time that there's still shifting going on. So I think the normal, big push in the spring and summer, I don't think really applies this year. I just don't see it happening, especially when kids are going to school from home. We've got online learning. So it's very different, very unique, but we're all here rolling with the punches.
Jacques, we never saw that coming. Jacques Gagnon, of course, you're always busy buying, selling, you're listing homes all the time. This was an interesting ingredient we sort of mixed into 2020 was, we used to have people upgrading their homes because they needed more space. Their families were growing. Now there's a whole different ingredient. People need to stay home and they need office space. They need a space for the kids to do their education. So it's changed a little bit of what's going on out there. Jacques, are you feeling that too? Harry Glanz, join us into this conversation here. Of course, Harry, we've talked about that we were going to, and we touched on a little bit last week, talking about what to look forward to in 2021. Again, now we're about 40 days out from the end of the year. And of course, we don't necessarily are predicting stuff. We're just sort of forecasting what the temperature is going to be here in the real estate market.
Yeah, well, with Jon and Jacques on the line here today, we've got two experts that are used to buying and selling a lot of properties. And we talked about the shutdown that really happened in March, Harvey. So March, April, and May were really shut down. May 8th, the governor came out and said, all right, let's make real estate and realtors essential part of our economy, make them essential employees and employers. So we saw the residual effect. August, September, and October were our new March, April, and May. And that's where we're sitting right now. So what we have here, Jon and Jacques, and we always ask this, and Harvey's asking the question, we have 40 days approximately till the end of the year. What do you guys see for December, January, February, and March? Essentially, December and the first quarter of 2021.
So I think I'll take the lead on this one, John, and then you can kind of bounce off me. I think that traditionally we see a slowdown, at least in my business, in December and January. So far this year, we have seen so much movement in the last quarter heading into the first quarter. So John has a very famous saying, and it's said around the office quite a bit. What you do now in real estate is 90 days out. I am seeing more traction for the January and February, and not just the pandemic. It's also because of the demand. Some of my buyers are actually going to wait till the slower months of January, February, and March in order to get out there and look at houses, because it's a very competitive market in certain price points. John, what do you think?
Yeah, so I'm going to build off of that, Jack, and that's exactly right. Let's look at it from a macro level for just a moment. The three ways that you can spur economic development and growth is through, debt, going into debt as a government, looking at interest rates, which we know what has been happening with interest rates over the last several years. And then, of course, taxes, right? Putting money back into people's pockets. And so we bet big on that over the last 2 to 3 years as a government. Okay. And so what's happening is you have a pandemic that hits and throws a wrench into all these different aspects of that. But fundamentally, the market was still really strong. And so what I wanted to point out, and I don't know if a lot of folks, are aware of the statistic, but nationally, if you look at the 35 and older demographic, these are over 70% of the folks buying homes. Their unemployment rate is below 6%. So at this time, with whether it was the stimulus package that was passed earlier in the year, or it's where, like what Jacques was talking about, this transition into a online virtual world, running our businesses or running in our departments at home, they're still buying properties, and they're getting into it now because mortgage rates are, sub 3%. So I predict a very strong first quarter for those reasons, with very tight inventory. My concern is more Q2, Q3.
All right. Yeah, definitely. The inventory is going to really drive the marketplace. We see a lot of overbidding and stuff. We're always coaching up our clients and telling people, look, this pre-approval talk, we always talk about pre-approval, sort of getting your plan together, getting your additional assets together also because of the fact of the lack of inventory. Jacques, a lot of these transactions are coming in. Again, you'll list the house. There's multiple bids. And generally speaking, you're looking $5,000, $10,000, $20,000 over asking price because there's always a family out there that's already done their investigation. They've already lost out on 2 or 3 offers, maybe more than that, maybe 5 or 6 offers they've already lost out on. Now they're prepared to pay a little bit of extra money and get that house they want. Jacques, do you keep running into this?
Oh, yes, I do. The heartbreaks I'm seeing, even in the $500,000 range, it's crazy. Families come in, and I had a listing and we had 7 or 8 offers in the first week, and it was over 500,000. And they're offering 50, 60,000 over appraisal with guarantees, and their heart's on a string, and they want the house so bad. And the reality is, if you really want it, you have to have a very solid game plan with your agent, and also be ready because the appraisals are starting to come in a little more conservative than they were before. The market, that's just what's happening. Just because there's no inventory doesn't mean your house is worth $1 million. So that's what buyers are feeling. That's what sellers are seeing. And it's a different market, but it's a great market because of the interest rates. So just because values are high doesn't mean you're not getting an awesome deal right now.
Yeah. John, you actually touched on it a little bit. Starting in 2020, January and February last year were great months. Like you said, the rate environment had already made 2020 a really strong year. Then it got a little funky, but the rates stayed ultimately low, and that supply and demand really kicked in as more and more families are saying, wait a minute here, I want to step up. When I drive home, I want to see the kids playing in the neighborhood. And we're getting a lot of transition. We're getting a lot of families now that are moving back into these neighborhoods where they're going to be raising their kids with lots of different families.
Yeah, and that's fundamentally never changed, right? As families age, there's an old saying that Doug Andrus, who's been on your show before, has said,
oh, yeah.
People buy and sell homes for the same reasons. They get married, they get divorced, they have a family, they downsize, they get a promotion, they get let go. Now just throw a pandemic into 2020 and you have a whole other level of accelerating the reasons people are moving. I think getting away from being on top of each other, being super close knit quarters, we won't see that for a long, long time. And that's not necessarily a bad thing. But right now, if you've been on the fence in terms of making a decision to list and maybe level up into your properties, now's absolutely the time to look at doing that.
All right, when we come back, we're going to give you all sorts of information. Keep it here on 97.1 The Ticket, 248-539-9797. We'll be right back.
Hi, Harry Glanz and Dan Burke from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
outside. November 21st, 2020, 40 days before the end of the year. We're on a little bit of a soft shutdown, I guess, here across Southeast Michigan, all around the state of Michigan, for crying out loud. Well, we make real estate fun here on the Hardcore Mortgage Show. Definitely give us a phone call, 248-539-9797. We've got Jacques Gagnon. We got the whole Keller Williams team, John Reusch over there. Up at the Lakeside office, and you guys have a huge office. You guys are doing a lot of business. It's a lot of fun always to have you on because you're touching a lot of people. As you said, record numbers this year. Everyone across Southeast Michigan and really the United States, we're experiencing some really unprecedented times here as more and more families are looking at home ownership. Who doesn't want to own a house with these very, very low interest rates? As we talked about for several years, the rates are so low, it just makes it extremely affordable versus renting. Why pay your landlord's mortgage? Hey, Lise, just a couple things to go over. I know you were away just for a short little time over there, enjoying a little bit of sunny weather in Hawaii. I mean, who gets to go to Hawaii in the middle of the month? You did.
Yeah, I was supposed to actually go to Marco Island, and we found out that a hurricane was coming. I think that was on Thursday night, a week ago Thursday. And so hubby and I decided, we're going to switch our plans, and we left for Hawaii on Sunday.
Just do that thing. Hey, Lise, we always talk about families that got to get their household in order. Of course, you know, you guys doing your thing over there, but there's so many families that can really prepare themselves for home ownership. And of course, a big part of it's the credit, you know. Many of our clients, they've always had perfect credit, but as we were talking about some subjects in school and stuff, a lot of this stuff isn't taught in school, John Reusch. And it's just more and more as we meet families, we're finding out that, hey, wait a minute here. We got to sit down and give just this little bit of knowledge will really give you the confidence to move forward. John, talk about some of the challenges that you run across, some buyers or sellers, and what it takes really for us in the industry to sort of give the information to them so they can use it.
Yeah, I think that's a really good question. So two points to this, right? We don't have a conversation around like net worth growing up. We don't talk about loan to debt values and what you're actually worth in our world. And so I think the first step of looking at that is understanding that you don't need to have gobs and gobs of cash to get into the real estate market. That's like the secret about it, right? Is you need a percentage of what the home's worth. You need to make a smart decision with a professional that can consult you on your real estate goals, and then make that investment that we know will historically appreciate. And historically, as you make your payments, it's like putting money into a savings bank. So I think that's the first thing. You don't need gobs of cash. And then the second thing is it never hurts to have a conversation, right? So talking to a loan officer, talking to your mortgage reps, and really understanding, you know, where you are financially and what your buying power looks like. To Jacques' point earlier, so when you do find the property that you get excited about or that you can see your family making memories in for years to come, you're ready to pull the trigger and make it happen. And oftentimes the multiple bidding wars and multiple offers, you need to have every advantage that you can possibly have when you're going into that situation.
Yeah, we talk about credit being a big part of that, Lisa. There's no doubt. It's not buying a sweatshirt here. I mean, first of all, there's no universal interest rate for anybody obtaining a mortgage. It's based on credit scores, loan to value, what mortgage program you're going to get. Many of these variables, Lisa, but the one thing families can change, Lisa, is their credit. And you've got a couple of helpful tips. It's always about maybe moving that score up. Do it 3 months before you want to buy the house, not right now. Tell us a couple of tips that you think families need to know about credit.
Right. So I think two of the biggest misnomers that I hear all the time is I had a collection, but I paid it off, so it doesn't matter anymore. And that is not the case. So if you're, thinking about buying a house and had your credit pulled and there might have been a collection in there for, say, you switch cell phone plans and they dinged you for not, for your cancellation fee, because we see that a lot. They think that because they paid that off, that all of a sudden their credit score is restored, and that is not how it works. So if you find out and pay it off this month, it can take easily 3 years for your score to be restored to what it was prior to that collection hitting. And people have an idea it's a medical collection, so it doesn't count. Well, underwriters can manually, disregard a medical collection, but a medical collection still impacts your credit score. In the same situation, if you have it and you pay it off, it doesn't disappear like it didn't happen. It just gets updated as paid, that is paid derogatory. So I think those are two big things that when people are looking for a house, they're like, oh, it was, $200, I paid it. It's okay now. My score should be better now. No, your score isn't going to be better now. It takes time. We have to get that either collection deleted, like it never even happened, or we have to start building additional positive credit to offset that negative history. So there's a lot of misconceptions. The other thing is I have a credit card, I keep no balance on it. So it's got zero balance and maybe a $500 limit. And people think that's a good thing, except it's non-utilization of credit. So you're not getting the maximum score that you need. So people all the time will be like, well, I don't understand. You told me to charge $20 on that card. I don't even use that card. And then they get, 20, 30, 40 score bump depending on their scenario. So there's a lot of tricks that we can do to help you. But I think credit, we're talking about what they teach in high school, right? They should always, I always tell people, I have like a life skills class, how to balance your checkbook, what credit means and how to have good credit, how to shop for insurance, why you need to have insurance coverage, things that are basic life skills. And I think credit should definitely be one of them. And unfortunately, it's just a lot of misconception and misinformation. I would say this too. If someone's telling you that you have to pay a monthly fee, so such law firm is charging $109 a month and they're going to fix it. I had a bankruptcy and they promised it's going to go away even though you just filed bankruptcy 4 months ago. It's all a scam.
Yeah, Lisa, you know how I feel about that.
Save your money. Loan officers have the ability to fix your credit and they're not going to charge you.
Yeah, I think that's wonderful. Lisa is known.
We're here to help and we're going to get you to that position, whether it's this year, next year. You could have filed bankruptcy 2 years ago or 2 days ago. I'm going to help you. I'm going to put it in a plan. Harry, are you voguing? What are you doing up there?
Yeah, exactly. So Lisa, I can't jump in fast enough because you are the credit queen in our office and you hit the nail on the head.
Harry, are we hearing Harry on the air?
No.
Harry, we just lost you. What happened there? Hey, Harry, we're going to go right back.
All right, there you go. I got you. Listen, so anyways, I'm jumping around because Lisa is the credit queen in our office. All things credit, go to Lisa. Here's the thing. She said it. If you're paying $500, $750 to a credit repair agency, stop the check. Don't do it. They can't do anything for you that Lisa and our team can't do for you. Here's the bottom line, everybody. If you have a derogatory blemish on your credit report because you didn't pay a bill, it's not coming off. You either have to pay the bill in full or make arrangements with that creditor to pay something off, and then you can get on the road to recovery. Do not write checks to credit repair people. Credit repair people, go ahead and call me or email me at hglanz@lowrateonline.com with your disgust in me right now. I just took $500 to $750 away and deposit money away from you because we can do it for free. Thank you.
I have to give a testimony to that too, if you guys don't mind. Lisa is the absolute queen of it, and Harry, you're right. I've sent a few clients of mine that were renters, and now they're looking to become buyers. And she not just didn't. They called other loan officers before, and they said, "This is what you have to do. Call me in 6 months." Lisa gave them a whole roadmap, what to do from start to finish, and everything between there to be financially ready for when the time comes to buy the house. So if you are in credit distress, your world is not over, I promise. You have to work with the right partners. And again, Harvey and Harry, you're correct. You don't give the money away to a repair company until you speak to a lending partner that has your best interest in mind, not theirs.
Well, I like that a lot. The CUR is the credit utilization ratio. I can barely say that this morning. Increasing your credit limit. So a lot of people this time of year, they start jamming up their credit card. So if you have $3,000 or $4,000 limit, you want to keep those balances really low. We say less than 10%. We want you to pay those off again. If you do that, your credit score is going to go up. And if you're looking at buying a house this spring, you need to work on that now. So get ahead of that train. Jacques, I want to dive back into neighborhoods. It's really fun. Home ownership's great. And congratulations. You might have had a new baby recently. So all the young families out there that are building up their families, then they're moving into these neighborhoods and the kids are running around. There's driveway cocktail parties. We've seen a lot of that, especially on the east side. You guys, the neighborhoods have become very important again. Jacques, then there's the empty nesters. Maybe they don't want to hear all that noise outside.
Sure. So talk about the neighborhoods first. I was having a conversation with a coworker, and I saw a picture online, and it was a picture of
audio again. Son of a gun. Hey, good morning, everyone listening out there. It's 9:25. You got on 97.1 The Ticket. This is the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. You can give us a live call here in the studio at 248-539-9797. And just like every morning when we do these Zoom broadcasts, John Reusch, we have audio and technical problems because we are mortgage and real estate people. If we were professional radio people, we wouldn't have all these.
Yeah, you know what? It happens, but it's a lot of fun, and we're gonna continue to provide value. I want to point something out that you were talking about there for a second there, Harvey.
Hey, John, let's hold it, and we'll come back after the break, and let's roll with that for sure then. All right, when we come back, John Reusch is going to add some unbelievable information for if you're buying or selling a house, keep it here on 97.1 The Ticket, 248-539-9797. We'll be right back.
Hi, Harry Glanz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
All righty, welcome back to the show. 9:30. Hey, not too bad outside. We got Thanksgiving coming up next week. We want to wish everyone a happy Thanksgiving. Be safe out there. Again, don't drink and drive. Play it safe. You can call an Uber. You can call Lyft. You can call me if you're not able to drive. You can just look me up and give me a phone call. I'll pick you up. All right, you got to tune to the Hardcore Mortgage Real Estate Business Show. Again, we're in our 21st year. We got the guys on from Keller Williams Lakeside. John Reusch. I got that right finally, John. And of course, Jacques Gagnon. Of course, we got a little echoing going back and forth here, but we're going to give it to you no matter what up till 10 o'clock. We got Pat Caputo coming on with sports. We've got Rieger coming on then. And then who? Dan Leach? We got the whole staff. Everyone's on here. We got college football, Michigan game coming up about 6:30.
Awesome.
with the pregame here. Then the game starts about 7:30. So keep it here on 97.1 The Ticket. Sports all day long. After we get you set up so you can watch the sports in your own home, that's what's really fun. Hey, I wanted to talk about a couple homes in particularly. Jacques, you've been working with a whole bunch of listings this summer and fall, and they, like you said, the amount of buyers have been out there. It's nonstop. Give us a little bit about some of the homes that are out there available for people, the price ranges, and why you find these homes to be really good values.
So there's, so my main focus is the east side of Michigan, the Tri-County area, but particularly Macomb and Oakland County, northern Oakland, Macomb County, northern. The starter home cost that I have seen over the last 3 years has increased, obviously. So your St. Chris Shores home, I saw a tri-level that was sold by an agent in our office. Shout out to Pam Van, always kicking butt. It went for $220,000. Those are homes years ago that were in the mid to lower hundreds. So the cost of living has gone up, as it always does. But there is some great values out there. Sterling Heights area, Shelby Township, new construction's going crazy in Washington. Oakland Township is another big one that a lot of my sellers in the Shelby area with younger families in the Sterling Heights area, they're moving to Oakland Township. So the Squirrel Road, Tinkin area, Brewster area, you're seeing a lot of that area in high demand. And because the schooling system's great and they're moving with younger families from the sports and stuff that they're involved with, they're all kind of moving together. So that goes back to that neighborhood conversation that I got cut off with earlier. There is great value out there. There always is. The prices are high, but again, the cost of living for the interest rate is so low, it almost balances itself out. And at the end of the day, if you're paying rent, you're not making any forward progress into home ownership and, like John said, self-worth and net worth.
Hey, you guys, we're going to go to a caller here. I'm going to take all the calls all morning long until about 10 o'clock. And then, of course, Back Up will be taking your calls also. We got Robert calling in from Warren. Good morning, Robert. Welcome to our show, and go ahead with your question. Real good. Well, we want you to definitely get that. Yeah, we're going to get you on the path to getting that credit score up. And although there might be an opportunity for you to get a new FHA mortgage or something like that, that might benefit you, maybe a cash out consolidation loan or something, that credit score is a little bit on the lower side. And it probably won't take us too much. Lisa, probably not too much. What kind of questions do we want to run through Robert and see what he's got going on and give him some good advice right now on the radio?
Yeah, without getting too personal into your nitty-gritty business, usually we're looking for hopefully 620 or more. We can sometimes do it lower on a case-by-case basis right now. FHA would most likely be your way to go. Just out of curiosity, did you have like an event happen? Did you have to file bankruptcy? You don't have to get into details. Was there like a specific event that lowered the score, or you're not even sure what happened? Right. Sure. Yeah. So a lot of times, depending on where you're at in that process, if you've already kind of caught up on payments, it's usually something that we can get fixed pretty quickly. If you haven't caught up on payments and you're currently late on things, your very first and most important step is to get caught up. You can't have late payments, especially on your mortgage, if you're trying to refinance, obviously. So everybody's scenario is different, but we can definitely reach out to you once we're off the show so we can get more detail and we can put a very specific plan together for you and get you where you need to be so you can take advantage of these rates. What rate are you at right now? I'm just curious. Oh my gosh, yeah.
Oh,
Lisa's going to help you a lot.
Yeah, we that rate is extremely high right now, so we can definitely want to lower that and save you money. And if it's okay with you, we'll reach out afterwards and put you on the right game plan.
thanks for the call, Robert. We really appreciate it. Mr. Glanz, your hair's getting gray when we said 5.5 is a high interest rate. Son of a gun, are we in some great times now? Now we're going to hear what it was back in the day, Harry.
Well, let me say this to you. First of all, Lisa will get you on the road to recovery.
Harry's
If anybody
volume
can
again?
do it.
Harry, we lost your volume again. I don't know. Here, let's try it again. There you go, Harry. We're going to go back to Harry again. Old man Harry's going to tell us all about the interest rates when they were at 12, 14, 15, 17% here. But there's no doubt if you're at 5.5%, and Lisa, we see many of the families out there that might have got an FHA mortgage 2, 3, 5 years ago. Now's that great opportunity. I took a call this week, and sure enough, the family had bought a home. I think it was about 3.5 years ago. Not only do they have 20% equity, their credit scores are good enough to get a conventional mortgage. And we ran the file, and we don't even need to do an appraisal. Again, right, folks, there's nothing really free in the world. There's a reason why we were going to not charge you for an appraisal. And it's because when we run your strong file, your zip code, your credit, your house, and your information will indicate to us whether or not an appraisal is required. If it's not required, it's called a PIW, a property inspection waiver. And again, that not only saves you money on the closing costs for your mortgage, but then you can go into the new transaction knowing that you're going to definitely not have to pay mortgage insurance. And that's the key part. Harry, you want to jump in?
Yeah, we can't rely on that. Sorry, my volume was cut off for obvious good reason, I think. So we cannot rely on those industry terms that loan officers and realtors like throwing around like a PIW. Property inspection waivers are not guaranteed. I personally don't throw that term out because it's just a hook term. I don't like it. If we happen to get one, you're not going to get charged for an appraisal. Okay. It's just as simple as that. Nobody should guarantee that they are not going to have to do an appraisal on the house. It's like the icing on the cake. Okay. That's number one. Number two, talking about credit, and I apologize, Lisa, 5.5 interest rate right now is extremely high. There has to be a reason. Lisa will figure it out for you. But again, back in the day, Harvey, 17, 18% interest rates, 1990 rates were at 12%. When there was an old saying, we thought that if we could get it down to 10%, it would be great. Under 10 would be stealing. Look where we are now. Don't let an eighth or quarter in rate right now prevent you from refinancing and saving money or buying a home and saving money. Jacques said it. It's balancing itself out right now. Sooner or later, it might come to a point where the rates might start going up and the higher priced homes don't balance it. But right now, the rates are so low that if you want to get into that house or refinance, you could still save plenty of money.
John Reusch, a lot of new people got into the real estate world. Even we see a lot of new loan officers and stuff out there. Just a little bit about like some of the new people. What do you think some of the good advice you could give some of the new agents? I wrote down one thing yesterday. I said, just involved, if you're getting into the industry, I wrote, just return your phone calls. You really want to answer those phone calls. To me, and you mentioned it, John, it's all about communication.
Yeah, so I think there's two things to kind of consider when it comes to being new to this industry, right? It's a meet the people business, period. Where you meet them might change, right? It might not be a coffee shop anymore, but it still could be. It might be on Facebook. It might be on social media, but you got to meet the people. I always like to say at my office here, you can't get a hit without an at-bat, right? So that's the first thing that you need to focus on. You have to meet the people. The second thing is you got to know what you're talking about, right? So look to role models, mentors, brokers, look to senior officers that have been doing this a long time. One of my favorite sayings is experience is the best teacher. It doesn't have to be your own. You just need to be going out like a sponge. And if you're new to this industry, look for a training plan and a program. Look for a results-oriented brokerage or support office that's going to have your back. That's more critical today than any other office. Lakeside has not been disrupted because we moved to remote operations on a dime. And we will continue to do that because that's where the industry is headed. That's where our lifestyles are headed. We were already on that track. The COVID pandemic just accelerated it about a decade.
Hey guys, tell me a little bit about new construction ways. I know, Jacques, you're working in the Macomb County area. Macomb's always been gangbusters in regards to new construction as families were moving from 21 Mile all the way up through 26, 28. They're going all the way up there. Give me a little bit of the barometer out there for our listening audience. Some great new construction opportunities out there.
Yeah, there is some large developments going in for all different price points. So a lot of people say new construction, they think, oh, I have to spend $600,000 to get a new construction home. And that's just not the case. There is some beautiful developments out 26 Mile Road, all the way out to 34 Mile Road, from North Avenue all the way across to Rochester Road and in between there. Great opportunities out there. New construction, If you're interested in it, give your real estate agent a call. They can set up the tours. There's a lot of opportunity, but those are going fast too because the cost of buying is so low. So if you are interested, get that pre-approval first.
I'm going to jump in here too, because I think a lot of people think when they walk into a builder's model that they don't need an agent representing their interest. They go to the builder, they feel like it's an order form, and they just got to pick, this is the counter I want, this is the cabinet I want, this is the faucet I want this refrigerator, and that's not the case. I tell people all the time, you should have an agent represent you as the buyer, even with a builder. Even if you're walking into that builder's model, you still need representation. And I think that is a huge thing in this industry that gets missed.
Lisa,
People
great
just walk
point.
in, take
Great
that
point.
order.
Hey, Lisa, let's come back and talk a little bit
Okay.
more about new construction. There's transfer tax, there's title insurance, there's some other facets in a new construction. You bring a seasoned realtor with you. Not only can you save money, you're going to have great confidence. You're going to have someone running that road with you for the next 12 months during construction. All right, 248-539-9797. We'll be right back.
Hi, Harry Glanz and Danberg from Capital Mortgage Funding. Over 30 years in the mortgage banking industry, hundreds of thousands of families served. Let us serve you. Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker.
Welcome back to the show. Hey, we're just joining you till 10 o'clock. It's the Hardcore Mortgage Real Estate Business Show brought to you by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. You can always catch us at Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. We make buying a home fun. We'll get you set up with some great real estate agents like the whole team over there at Keller Williams Lakeside. And John Reusch, we were talking a little bit going into the break about new construction up that way and some land development and stuff. And there's a reason why things are really developing. We might have a baby boom, you mentioned.
Yeah, I mean, if you're thinking about what the COVID pandemic's done, right, is we're in closed spaces, and what else is there to do, right? So every real estate professional is kind of looking and thinking about a boom that's absolutely going to happen next spring into the summer, Q2, Q3. There's absolutely going to be an influx. So if you're thinking about expanding your presence or expanding your footprint in terms of your house, now's the time to look at it before maybe you're competing with even more people next year. Because this work from everywhere and live from anywhere movement, it's here to stay. It's not going away. So whether it's a new baby or potentially people parting ways after years of marriage because they can't be in the same house anymore, we're definitely seeing an increase in that.
I don't want to steal your line, but didn't you say something about Xanax and bourbon? But we'll get back to it. Let's go to Willie out here. Hey, Willie, you're calling in from Brownstown. Good morning. Welcome to our show. Good morning. Go ahead, Willie. What's your question? Sure.
Hi, it's Lisa.
Lisa Lawson, what do you say to this gentleman? He's got about 100,000. He bought the house for 150. Might have some built-in equity. What should we do to help him? Oh, she dropped. Oh, Lisa just dropped. All right, I'm gonna answer that question for you then. Willie, there's no doubt here. There's an opportunity that if you bought the house a few years ago, there's a good possibility, especially in Brownstown, one of the great communities in the downriver area. There's equity down there. And again, that would be the first step. We'd like to just take a look and see what some of the neighborhood is selling for, comparable houses. Once we can determine what the neighborhood's selling for, we can take a look to see if maybe just doing a rate and term refinance and dropping that interest rate would be the best route, or maybe we could free up $10,000 to $20,000 that would help you knock off some of that credit card debt or whatever else you have. Or as you mentioned, maybe put the money back into the house for home improvements. It's a good call. And, we sort of threw it out there earlier today, Willie, talking about credit scores. We definitely want to get that score up. Doing a cash out refinance, you want to have credit scores over 700. Not to say that we can't help families under that, but a better credit, when you see these great interest rates out and you're already at 4.25, you're going to want to work on that interest rate. Lisa dropped off a little bit, but what we'll do is we'll have her give you a call off the air. We'll run your credit for you and we'll see how much equity you have in the house and really lay out a couple different choices for you. For anyone listening out there, that's definitely a kind of call you want to give to us, especially around the holiday seasons. Get in front of this trouble or get in front of the situation before things get really bad. And if you need to put money into your house, John and Jacques, you guys both agree, your home, it's a great value. You're putting money, you're paying it off. It's an asset. It's something you can have in the future, and how important it is to keep the structure, the functionality of the home really going good so that your home appreciates just like all the other homes out there.
Correct. Yeah. Having that built-in equity, it's a great, a home ownership is a great savings plan for financial freedom and in the financial future for not just your generation, but future generations as well.
Hey, Harry, refinance boom of 2020 is going to continue. We're talking about it continuing through 2021. We talked a little bit about where's the market going to go. And again, as soon as some news comes out about a vaccine, Harry, we had the election. That was the first hump we had to get over. Now a little bit of news about the vaccine. These interest rates could move up pretty quickly. You got to be careful.
Yeah, there's no reason to wait. Whether you're purchasing a new home, refinance your existing home, the rates right now are where they are. Okay. Don't miss out. Again, we've got two phenomenal real estate gentlemen on our program this morning. And if you find that I'm going through this with my daughter right now, she's looking to buy a house. She lives in the state of Colorado where things are absolutely booming. If she finds a house, she's going to buy it. She's not going to wait around. She knows a pretty good mortgage guy. She's all pre-approved. So you can't wait. If you see something you like, you have to pull the trigger. Same thing with refinancing, Harvey. You can't, rates are not going down to zero. Some smart guy said that for years and years. They're not going down to zero. So what you have to do is you have to act now. And you know how I feel. Between now and the first of the year, people like to take time off, but their brains don't have to take time off. If their brain takes time off, then they're going to lose money rather than save money. How do I feel about rates? For the next 40 days, I think rates are going to stay relatively low. Who knows what's happens January 1st? Anybody who tells you they know what's going to happen, you got to run away from those people. You have to take care of business today, and then you'll be set up for the future.
Hey, Lise, these transactions are taking 30 to 45 days. And in some cases, getting an appraiser out there, if you need an appraisal, could take a little bit of time too, just the pure amount of volume out there. So Lise, just give us a little helpful tips why it's so important to get started with that.
Yeah, I mean, the earlier you start, the better. Because one thing we can control is we can control how fast you get your documentation together. We can control how fast your loan officer gets things submitted, but what we can't control is how long the title company might take. Title companies are excruciatingly busy because not only are they doing all this purchase business, they're doing refis as well. So we might have to be patient and waiting for title. And same thing with appraisers. They're so busy. We've got Thanksgiving coming up. We're going to have holidays coming up. People aren't going to be out there, getting their appraisals done, in the next 3 days because Thanksgiving's Thursday. So we have to be a little more patient. So the things that we can control, like, getting documents together, we need to, be proactive and do it quickly. So the whole entire process is seamless and can get done in that 30 to 45 days.
All right, quick little helpful tip out there. If you're getting money from family members to buy a house, if you're going to get some gifts over the holiday season, if you have family paying you back, they've owed you $5,000 or $10,000 over several years, and they're going to start, all of a sudden, they're going to write you a check right when you're in the middle of buying a house and you're going to deposit that. You really have to paper trail things, and funds to close are one of the most important things. You've got your credit, you've got funds to close. And you got to talk to your mortgage people about any activity you might have in your bank account. We're starting to run out of time in the show. John Reusch, give us some final thoughts here as we're headed into 2021.
Yeah, I think 2020 taught us that even the best laid plans can go sideways, right? So what I would encourage every listener out there to do is to focus on who's in your corner. If you don't have an understanding of where you stand with pre-approvals or your credit score, and you are thinking about making a move or making a plan for real estate in 2021, now is the time to reach out. Now is the time to look at your credit score, your refi, what your equity in your home is. The good news is so many Americans have equity in their home today, which back in 2007 and 2008, they didn't have that. That's a big deal. That's a really good thing. And the other thing is have fun. Enjoy this process. Understand that, we're moving and buying 2, 3, maybe 4 times in our life. So enjoy it. Enjoy the relationships you cultivate. And remember that it's a journey. It's not just an end game. So
Jacques Gagnon, go ahead, sir.
So the biggest thing I see with people that are waiting to buy is they think there's this historical market crash that's going to happen in 2021. And Harry, that's probably a different radio conversation down the road. But Harvey and Harry, you said it. We don't know what's going to happen, but don't wait for what could happen tomorrow, because honestly, like John said, there's a lot of equity out there, and I think we are going to be just fine. I know we will be. And if anything's taught us in 2020, we can adapt and we can achieve.
There you go. I love it. Hey, guys, way to wrap up the show here. It's been another version of the Hardcore Mortgage Real Estate Business Show. Again, brought to you by Capital Mortgage Funding. You can track us down, 1-800-LOW-RATE, the best mortgage banker. We got Pat Caputo coming up with sports. He's in the bullpen all ready to go. Want to thank all the guys over there at Keller Williams Lakeside. If you're looking for a real estate office, get in touch. They do a great job over there. Nothing like working with true professionals. All right, folks, we will see you next Saturday. Be safe out there, and a happy Thanksgiving to all of you.